The broadcast is now starting. All attendees are in listen-only mode.
Good morning. This is Christine Clare, Executive Director of the Association of California Symphony Orchestras, and greetings from AXO World Headquarters in Sacramento, and Ken, who's in San Francisco. Our topic today is a little tricky. It seems to have so many interpretations, and yet, you know, we must be on the right side of the law. It's expensive to make a mistake here, as Ken will tell you about. Ken joined the San Francisco Symphony a little over a year ago with more than 15 years of HR work under his belt. It's been an interesting last few months for him since he joined, as you probably know, and we're absolutely thrilled that he's able to be on this call today, given what's going on at the Symphony. Before we get into our webinar, I want to let you know that we're going to keep the lines closed as we go through the slides. There was an email that you received this morning, told you that questions can be asked by typing them in. I hope you're clear how to do that. At the end of the webinar, then, I'll read the questions for Ken to answer. If you've got any other questions, then please call Caroline at our office number at 916-484-6744. So here we go. Ken, shall we get started?
Sure. Welcome, everybody. And as Chris said, it's been a busy time here, and it's been quite a learning experience for me, learning about how the symphony and the orchestra world is different from other places where I've been, particularly dealing with the ports and the longshoremen. So it's been quite an experience. One thing, though, that I did learn coming here is we do make use of independent contractors, and there have been questions. Even yesterday we had a question here about someone's status, and I said, you know, it's somewhat ironic that I'm going to be talking about this, and we had questions come up internally regarding someone's status who's been a contractor for quite a period of time, and because of the different work they were doing, it was still unclear. We've decided that we probably need to change this person's status to that of an employee, even though they have a contract, and we need to give them benefits because of the length of time, if nothing else, and the way they do their work. And we'll get into how some of that works. I know there are probably a lot of people who have questions about the status of people that work there, and hopefully this will help. The issue is a complicated one. Well, we're addressing independent contractors, sometimes referred to as people who are self-employed. Individuals, in many cases, they do have a entity through which they contract. They set up a business and get a license. Those aren't really the problem. Those people are usually have tax filings. They have different things set up as a result of their filing. This is for people who come in and do work for you independently. There's very much a growing class of these employees, and as we get into it, you'll see that the Obama administration has really started to focus on the loss of revenue at the federal level for failing to withhold taxes and the way these people are paid. And so their audit staff has increased significantly, and they are really focusing on employee classification and what's going on. There were class action lawsuits decided against Seattle, Washington, and King County, Washington, due to the violation of ordinances that limit the length of service of temporary employees. And in California, we've had cases litigated with Los Angeles County Fire Department, as some of you may have seen in the news, the Metropolitan Water District of Southern California, where they actually reclassified temporary employees as regular permanent workers. These cases are both still in the process of being settled. And as the courts make some of these determinations, they continue to define the regulations much more closely. One both legal and tax issue was Microsoft, which really changed how workers are handled in Silicon Valley. In 1996, a class action lawsuit was brought against Microsoft with thousands of current and former employees that had been classified as temporary or freelance. And they ended up having to do a lot of settlements with regard to failing to withhold taxes and failing to provide benefits to those who actually were working as employees. The issue really tied up their legal resources for almost 10 years at Microsoft. So it is something that can get very complex.
Ken, it's Chris. My slides aren't advancing. Have you
I haven't gotten there yet.
Oh, sorry.
Kind of introduction. Sorry.
Sorry.
So now we get to the first one. Really, what I'm going to do is lay out the definitions of an independent contractor versus employee, how you determine status, and some of the common law rules, and what happens if you do misclassify, and if there's a way you can fix it. And there are ways to fix it that minimize any damage that you may have as far as penalties. With definitions, there are the first type of work relationship to discuss is that of the employee. The simple definition is an employee is one who contributes labor and expertise to the endeavor of an employer and is hired to perform specific duties which are packaged into a job. The independent contractor is a relationship that causes the most confusion. There are different types. You might have interns working in a nonprofit organization, and there are two types of those. There's those who are there for work experience. That may be in the second or third year of their school period. This may be a short-term, 2 months, or during the school year. This is not usually a problem because a lot of the interns are unpaid in nonprofit organizations. They are there to get, usually there's an agreement with the school, and they are doing this for college credit and work experience, and usually to help finalize their study. A research internship is usually for somebody who's working on a dissertation or doing some other kind of work towards graduation, and is in their final year of school, and they may choose a topic and come in and present something to the organization and want to do it, and those are not really temporary employees or independent contractors. They're doing this for work credit, and that needs to be documented. I think there needs to be some kind of documentation and something to maintain so that they are not mistaken for other types of employees. There are temporary employees. Sometimes they refer to them as permatemps. These are the temporaries that never really seem to go away, or they go away for a couple of weeks, then come back again, and you end up seeing them there year after year. You see the same people, and they're referred to as temps. I had somebody come in after I arrived and said, I have been a temp here for 20 years, and I don't really consider myself temporary anymore. And they were right, and we needed to fix that. Traditionally, temporary employees are really those who are hired as a substitute for an employee, someone who's on leave or vacation, or where you need someone to help staff for a project where you don't have regular employees to do it. And then some of these sometimes morph into a permanent arrangement, but when it does, you need to recognize when and make them an employee. Finally, there's independent contractors. These are separate and distinct from agency contractors. We're not talking about agencies. We're not talking about people with a business. These are people who have their own schedule of hours. They accept jobs from you or someone else, some other entity. They may work for more than one place. And they have control over the performance of their job. They use their own equipment. They furnish their own supplies. They provide their own insurance. They repair their own equipment. They basically are responsible for expenses related to their work and the way that they do their business. They may perform services not normal for the business of the employer. So this is really somebody who you say, okay, you're a contractor. A lot of times you'll see legal people doing this, or financial auditors that come in, and you may have somebody as an independent finance person or a CPA who comes in to conduct an audit. And that's really the kind of people that we're talking about. The person performing services for your organization may be a musician who does something outside of orchestra work, like this little flute player or whatever he's playing. And you have an independent contractor, or what's referred to as a common law employee, and that may be someone who don't hire but who works as an employee. The independent contractor, an individual is not an independent contractor if services are performed which are controlled by the employer. Even if they have freedom of action, what matters is that the employer has the right to control how the services are performed. If they want it done on their premises, they have to relate to a certain person. They give them parameters to do their work, and and have basically control over how they perform their work, what equipment they're using. In California, an independent contractor means any person who renders service for a specified compensation for a specified result, under the control of his principal as to the result of the work only. So you give somebody, say, this is what we want done by such and such a date, and then you leave them alone to do it. So how they get there is supposed to not be a concern of the employer, because they're an independent contractor. They do the work on their own, in their own way, and just meet a deadline to produce something that you've asked for. So I'm trying to make this as simple as I can, because the regulations, if you look at them, tend to be very cumbersome. Common law rules would say that anyone who performs services for you is an employee if you control what will be done and how it will be done. So if you give them freedom of action to do it where they want, if they're working from home or they're working from outside of you, it doesn't really matter. What matters is that you have controlled the details of how they perform their work. And typically there are three ways that they try to determine whether or not the organization is maintaining control. There's behavioral control, and as you see, that shows whether you have the right to direct or control the worker. An individual is an employee if you are controlling them and their work. And the way you determine whether or not you have behavioral control is over the type of instructions that you give and the degree of those instructions. So generally, the employee is subject to the business's instruction about when, where, and how to work. These examples that you see are the types of instructions that you would be giving to someone who's an employee. You tell them when and where to do the work, what tools to use, whether they need to hire or assist people. If they're doing this on their own, if they decide they're going to do it here, they have their equipment, they're hiring people to help, that makes them an independent contractor. If the organization is giving them these instructions, then they are an employee. And that's where these are kind of ways you can determine how you're handling an individual as to whether you're controlling their behavior. And as far as the degree of instruction, the amount of instruction varies among different jobs. Even if no instructions are given, sufficient control may exist if the employer has the right to control how the work results are achieved. A business may lack the knowledge to instruct a highly specialized professional, such as a lawyer or a finance person. In other cases, the task may require little instruction. The key consideration is whether the business has retained the right to control the details of the worker's performance, or whether they've given up that right to the individual. If you have less detailed instructions, clearly that reflects less control, so the worker is more likely an independent contractor. If you're doing an evaluation and training based on how the work is performed, that would make them an employee, because you really only want to judge the result. So any kind of periodic or ongoing training about procedures or methods is strong evidence of an employer-employee relationship. An independent contractor would normally use their own methods or their own way of doing business. Financial control. Typically, if you are looking at how the business controls something, you're working within a budget. So if you're going to someone to do a project as an independent contractor, you're usually giving them a budget. So that would mean that the different control factors fall into the investment piece, whether or not they're unreimbursed expenses, the opportunity for profit or loss, and these services, whether they're available to the general market or just for a specific employer, and how they're paid. Basically, a significant investment there's no real dollar limits that must be met in order to make it significant, but it really has to do with whether or not the independent contractor has investment in the equipment or the office space or anything else that they use in their working for someone else. And also fixed ongoing costs that are incurred regardless of whether they're doing work. If they have office space or they have equipment they're paying for, then whether or not they're working for someone, those expenses should still exist for an independent contractor. An employee, typically the equipment and all the burden of those expenses is on the employer. And if there's opportunity for profit or loss. Having an investment and having that kind of equipment means that the independent contractor has the opportunity to make or lose money based on how they price their services to the employer. That profit or loss opportunity makes them an independent contractor. If they're guaranteed a profit because they're getting a regular wage and their equipment costs are covered, then that's not really, that would indicate an employer relationship. And whether or not they can seek out other business opportunities. If they're working solely for one employer and there's some of these other controls and they can't go out and offer their services to someone else. I have someone helping me now during the union stuff who also does freelance work for other employers. She works usually from home and takes minutes and does things. That's an independent contractor. If I had her here on our systems doing the work for me, then she would be treated like any other employee. So she needs to be able to market her services to others. And method of payment. If they're guaranteed a regular wage amount for hourly or weekly or monthly, this usually is an employee. If they're not invoicing you for their services and have a fee structure that's agreed upon in their contract, then and how they're going to be paid, usually through an invoice for any period of time, then that's another sign that's looked at. And all these things are items that are looked at from both the federal and the state government. The type of relationship clearly is important. It refers to how the worker and the business perceive the relationship to each other. The IRS, whether or not there's a written contract doesn't usually matter. We'll look in some of the factors, whether they get employee benefits, the permanency of the relationship, and whether or not the services that are provided really represent a key activity of the business. A written contract, just because a written contract exists, that is not sufficient to determine their status. The IRS is not required to follow a contract stating that the worker is an independent contractor and that they're responsible for paying his or her own self-employment tax. The IRS is concerned about how the taxes are paid and how the two parties work together, not what a contract says, because that doesn't matter to them. Some employees have contracts, so that's and I think I discussed that at the AXO meeting about employment contracts. So there are those that exist in employees and contractors, so the IRS does not recognize that as a factor in and of itself. Employee benefits, generally independent contractors do not get benefits. However, not giving them doesn't make them an independent contractor, because based on other factors, they may in fact be viewed as an employee entitled to benefits. And the state has more of a stake in having employees have benefits because we're a state that provides benefits for uninsured within California. We're not part of the federal structure for that, or we incorporate that. So they have a financial stake in that as well, in addition to withholding taxes and unemployment benefits and disability and everything. And the permanency of the relationship. If a worker is hired with the expectation that the relationship will continue indefinitely, that usually is evidence that this is an employer-employee relationship. An independent contractor will usually have a specified period of time where they're doing a project or they have a completion date, they have deadlines, and they're expected to meet them. So if there's no specific project or period, then that would be other evidence of an employer-employee relationship. And also whether their services are a key activity of the business. If the worker provides services that are part of the business, it's more likely that the business is going to direct and control his or her activities. If you have an independent contractor, for example, working as a financial analyst with two other financial analysts, then, and the other two are employees, and they're doing essentially the same work because it's all part of the business, most likely that's an employee too, and they will be viewed as an employee. And what happens if some of these factors are missed and the state comes in and does an audit? Now, there are various ways the audit will be triggered, and some of that will be a complaint. Where I've seen it happen and where it's happened to me is when an independent contractor, April 15th comes and they're unable to pay the taxes that they are due because they've been getting paid 1099 wages, no withholdings, and they say, you know, I was working at this place for such and such a period of time, and I can't afford to pay this, but I probably should have been an employee. That will trigger an audit, and they will go in and evaluate, and then what happens? The penalties then can be very costly. California Labor Code imposes new penalties on employers who willfully misclassified their employees as independent contractors. Willful misclassification is when you voluntarily and knowingly misclassify that individual as an independent contractor, and you know that they probably are working as an employee. Courts have not really had the opportunity to provide practical guidance on this. Some of the cases currently going through the court system will do that. They really have to determine what triggers would consider identifying whether or not an employer is voluntarily and knowingly misclassifying workers. Typically, a well-reasoned, good faith misclassification falls short of that standard. But they will also say that if you're intentionally flying like just below that right control standard, that could be willful. So clearly there's some reasonableness attached to whether or not an employer is being willful, because most of the time when this happens is because of confusion or people not knowing whether or not they should change somebody's status, and they tend to be a little more lenient on that. One of the things that happened to me is I had someone who the California state insisted was an employee, and the individual did not want to be an employee. They liked the fact that they had higher compensation as a contractor, even though they didn't get benefits. They didn't want benefits. They rather had the cash. So I had to talk to the state and say, what is the penalty? We have to pay it because I don't have an option. The work had to get done. And they talked to me, and they actually reduced the penalty knowing that the individual is not complaining. And so you can negotiate if a situation comes up that's kind of outside of your control. Technically, I would have let that person go and brought someone in, but I was in a high-tech environment. High-tech workers were hard to find. We had no choice. So you have to kind of sometimes be practical as to what you need, and you have to work with them. And that only came up because someone else complained. This person met with the auditor and convinced them that they did not want to be converted, that we offered them the opportunity and they wouldn't take it. Where am I here? So the penalties in California for violating the Labor Code, Section 226.8, the fines are between $5,000 and $15,000 per violation of the law. In addition to fines, an employer that violates the law is required to post notice of this violation in a prominent location on its website for 1 year. If they don't have a website, they must post notice of the violation in each location where the violation occurred in a prominent area accessible to all employees and the public. That's something that nobody wants to do. Failure to withhold taxes, payroll taxes, includes repayment of back taxes with a penalty, and because it's a civil law, an employer can be fined up to $1,000 or sentenced to jail for up to 1 year, or both, if they violate this in California, because it is a civil law in California. So if the employer is engaged in a pattern or practice of violating the law regularly, then they increase the fines to $10,000 and $25,000 per violation. So if you have a number of independent contractors, they determine that this has been going on for a couple of years, and that's happening. That's where Microsoft ended up with an issue, and it got very expensive for them. They also imposed tax penalties, including repayment of back payroll taxes, subject to a $10,000 penalty, and possible fines of $1,000 and a jail sentence. In California, the civil penalties under, and just to give you an example, Section 6651, failure to file tax penalties is 5% per month to a maximum of 25% of failing to file for withholdings for some of these individuals. Section 6656, failure to make deposits of employment taxes, 10% if more than 15 days late, and 15% if not paid after being given notice. Section 6662, accuracy-related penalties, underpayment of tax due to negligence, and that would be for failing to withhold as well, or paying payroll taxes on these people. And then there's additional. There's Section 6272, Section 6273. There are a number of California regulations that that have to do with misclassification of employees. And so it does really become important that everybody take a look at how the status is and how they classify their employees. And that's only California. The IRS also imposes strict penalties for misclassifying workers, whether or not it's intentional. If it's unintentional, they charge 1.5% of wages paid and 20% of the employee's share of the Social Security and Medicare taxes. And if it's intentional, they will have the employer pay the full amount of federal income tax, Social Security, and Medicare that would have been paid by both the employee and the employer. So the IRS, too, they take a very strong point because they have tracked, I believe it was, they've decided that they had $4.5 billion in lost revenue from employers failing to properly classify employees. And so they're going out, especially now with budget cuts and this whole sequester, looking for another source of income, and this is one. It goes into the billions of dollars, and so they look everywhere for where they might get this. Now, clearly what I've noticed is that nonprofits tend to have a little less scrutiny. They're going after the larger corporations first, but with the increase, and wherever there is a complaint, if someone happens to complain, they will focus on that organization. Now, how to fix it? There is a voluntary classification settlement program, and this provides an opportunity to reclassify workers as employees for future tax periods with partial relief from some of the federal employment taxes from the past. There's ways of looking. You can look under the voluntary classification settlement program for the federal government, and there's different forms and everything, and they will work with organizations to allow them to fix things without looking into some of the past issues. And this is only if you really think that there's about to be an issue. You don't want to self-identify if you have an opportunity to just fix things and reclassify people, and you can do so without going, risking the threat of people filing complaints. We've typically approached people and told them we're going to reclassify them because of the length of the time they were here. We've given them an opportunity to select benefits and all, and so we have adjusted it. No one has complained, and it's worked a lot more smoothly for us. There is increased scrutiny being given to worker classification issues in order to address that tax gap, and taxpayers will have fewer opportunities for mitigating adjustments and penalties through any administrative settlements. So by voluntarily doing that, you tend to avoid the opportunity of them coming after you or going into some of that classification settlement programs. And really, while this is a very complex issue, I know that there's probably a lot of questions about specific jobs. There's a number of things that fall into a gray area. And there's some of these issues that are measured that don't really apply to some jobs. What I gave you is kind of an overview of all the areas that California and the federal government will look at in order to determine some of these classifications. I also tend to run things very quickly. As you may have noticed, I talk fast. I do things quickly. So there may be questions over what happened, and certainly copies of this presentation will be available to everyone. So I am going to end it here and let people ask questions and let Chris kind of look at how she wants to moderate that.
Thanks, Ken. I've actually only got one question here, but I bet there are a lot more. So I just see a hand being raised. Adrian, do you want to type your question in and I'll read it? We've got so many people on that I hate to unmute it, but let me read this one question. Is it possible for a union employee to work and be classified as an independent contractor? Specifically, pre-production work done by a production manager on their own time using their own equipment. During the season, then become an employee?
Then become an employee. Well, typically a union contract is going to govern the relationship between the union person. Is this somebody who's a union employee doing non-union work, or are they doing union work? Because if they are, then they would be, the relationship is governed by their union agreement.
I'm going to unmute the person that asked the question. Debbie, go ahead.
Hi, Debbie.
Debbie, are you there? Okay, she is not there. I'm going to mute her again. And I have another question here. If we have a person who is a temp employee for a 2-year project and hasn't signed the contract yet, what are the implications?
It depends on the project. If they really are a temp employee, they're doing a 2-year project that is tied to the business, then 2 years is a long time. That just by length of time, like in Washington State, they limit the length of time to 6 months. Anybody who's a temp employee over 6 months is an employee. So by statute, in California, they don't have a time, but it depends on the work and the relationship. If they're working in the office, they're working on a project that's related to the business, they're under the control of the employer, the work hours and everything, technically they're an employee. We've converted some of our temp employees that way. They're still, we consider them temp, they have an agreement, but we give them benefits. So we still have an end date. If we give somebody a 1-year contract and extend it a year, we usually will extend it and give them benefits that are tied. We'll say, as a temporary employee for working for us more than 1 year, you're now eligible for employee benefits, and they will have the same cost share. They contribute to the 403B, they get health benefits, and they get vacation. So they get a lot of the same things that our employees get, but they are still considered a temporary or term employee because they have a definite term of employment, and we still have an end date. It gives us the flexibility to be
Can you hear me? I've just lost audio here.
yeah. No, I heard that too.
Unmuted.
So, Chris, are you on now?
Yep, I'm on. Let me get Carol on because
Sorry,
I'm
I
not sure
think,
what's
I
going
think
on.
it's okay now, Chris. You were muted, but you're okay now, so carry on. We can hear you now.
Okay, I have unmuted Adrian. Are you there? Adrian? Okay, sorry, I can't. I have unmuted Adrian, but she didn't speak. Let me go on to the next question. Community orchestra with 5 concerts a year. This person is with a community orchestra with 5 concerts per year. Musicians who play only 2 concerts can be independent contractors. That's a question. What about 3 concerts, 5 concerts? Can a principal player be an independent contractor for this type of concert season?
I would say if it's a limited number of concerts and it's not, and it depends on how. I mean, here we have subs and extras that come in. They're paid according to the union agreement, but they are classified in separately. They don't get the same benefits as our employees. They're not treated the same as employees. So I would say in a musician, you're talking about a professional capacity, and so it depends on the length. If they're like typically treated the same as any other musician who's there. For example, our full 1-year substitutes get a lot of the same stuff as our employees do because they're there for the full season. But they're going to all the rehearsals. They're required to attend, and they still have to be replaced if they're out. So it depends. We have different categories, but if they're doing it periodically for a limited number of performances, if there are 5 in the season and they do 5, but it's not that they're expected to be there all the time in the following season and it's all up for grabs, then I would say that they're a independent contractor.
Can we advise, AXO advises that your musicians are employees?
If they're, it it depends on how they, now most of them are covered by union agreements, correct?
This is a community orchestra, likely without a labor agreement.
So they're not?
Right.
Yeah, then if you're advising their employees, then I would say that yes, they would be. If somebody comes in for 1 or 2, I don't know, if the season is 5 and they're working the whole season, then just like everybody else, then they probably are. If they come in for 1, more like a substitute, it depends on the relationship.
Okay.
That's what I would say. That's really what it comes down to, is the relationship. If somebody comes in to perform a concert, or even 2 because they need them, either because of the program or because they're replacing someone or filling in, if they're treated the same as others, if they're all, I mean, typically you would say if they're not all temporary, so if you have 15 regular employees and 10 who are not, but you have a total 25 altogether, they're probably all employees.
Okay. Okay. Here's another question. Oh my gosh, we have so many questions. We're a music school. How do we classify musicians who pay or do a gig or give master classes a few times per year?
Oh, a few times per year, probably contractors. If you have an agreement with them to come in periodically and do that, we have education programs, and it's somewhat the same. These are contractors. They're not doing regular work that everybody else is doing. I mean, these are typically coming in on a contract basis to perform a certain specific thing based on their expertise and their skills. So, yeah, I would classify them. And just to be clear, I'm not giving you legal advice, and you should check this, because I'm just talking from an HR perspective, basically how I would handle it here, because we do have people who do that. Our employees go out and provide master classes and do teaching at conservatories. They are not employees of the conservatory. There are employees, and they're doing that as a contractor and doing contract work separate, and they do it through different venues and different places. They are offering their skills not just to the conservatory, but to other areas as well. They go to different schools, they go to different festivals, they go to different places and play on a contract basis. They're employed here, but that's where they're not doing it just for you. They're selling their services in the market. And,
right.
You know, if they're not on staff and they're just doing this periodically, then they usually have an agreement.
Some of these
questions, they do it voluntarily. They do volunteer stuff.
Thank you. Some of the questions are, I know, are from organizations with very small budgets. So in regard to the musicians, there's not a labor contract, and you know, things are a little bit different with them. This person says, if we pay a person to fill in for a volunteer musician for 2 rehearsals in a concert, is that person a contractor or employee?
If they're filling in for somebody, they're more of a temporary employee and can be treated as a contractor. Typically, if they're substituting for someone, that's one of the indications that they're temporary.
Right. Okay. Again, on orchestra musicians with part-time orchestras, which would be, I think that designation, part-time orchestra, is for everyone except the LA Philharmonic and the San Francisco Symphony. I'm not sure if San Diego is considered full-time. It may be. So this person is stating that part-time orchestras are infamously in the gray area. What about musicians who are specifically instructed in rehearsals but not guaranteed work from concert to concert? Like a theater company, can one hire musicians based upon specific need for one show, but the next month be rehired again for the concert series as independent contractors? This is very complicated, I think.
Yeah, that's a tough one. And, you know, again, you have to look at the criteria and see where you think some of those questions are. You know, it sounds like, you know, if somebody's a musician, if they're working kind of regularly based on, you know, artistic needs or the programming, where you need that many musicians, you maybe bring them in as an employee. But if they're filling in or just doing extra work or something, then, you know, that becomes very complicated. And I'd hate to try to.
Yep. Thank
direct
you.
answer to that one.
Here's a question. Can you classify a music director as an independent contractor if they live in a different state and are the music director for another orchestra? This music director is also not required to conduct all concerts.
Typically, a lot of the music directors are contractors because a lot of them do have specific contracts and they offer their services elsewhere, and or they have entities that they contract through as a business. A lot of them, for tax reasons, have a they do business as something, and they're paid. If the check's being paid to them for certain work, I would say as they're offering their skills to different places and different markets and different areas, they typically are a contractor.
But with the designation of music director, doesn't that mean they're the music director of that organization, therefore that's
Our music director is a contractor.
Ah, okay.
And
did everyone hear that? Michael Tilson Thomas is a contractor. Does that mean you don't pay him benefits?
We pay his contract entity, MTT Association or whatever, MTT Productions or whatever it is. That's who bills us for his services.
Wow, okay.
And I believe that's the same for the New World Symphony and London
Philharmonic,
wherever he is, because he's basically like on staff at different places for different functions. But I think he's contracting with all of them. So he's a contractor for a long period of time, but because see and that one's a clear-cut one because we don't pay him directly. We pay the business entity that's set up to bill for him, and we pay them. So, and he draws his pay from there. So he's here basically part-time. I mean, he's here at certain times, and he is our music director, but he also offers his services elsewhere, and he conducts different places as guest artists, and he receives income from different places. And so that would make him a independent contractor.
So do you do a 1099 on him?
Yes.
Okay. All right.
When we do our 990s, he's shown as a contractor, as far as pay. He's not in our executive pay scale. And when we show our executives and contractors, he's one of the higher paid contractors. I will admit that, but a contractor nonetheless.
Okay. Here's a question. Is there a budget amount that triggers more scrutiny from the IRS? And I assume this person means the budget of the organization.
I would say no. I think they tend to, you might have more opportunity. The IRS will look at larger organizations, minus any other consideration. They will probably look at corporations where they believe there to be more opportunity to find issues. Otherwise, many audits are triggered by complaints. If someone complains within the organization and believes they were misclassified, that will trigger an audit, either by the state or the federal government. And as I said, the one I had was triggered by someone who couldn't afford to pay the taxes because we didn't withhold anything from the 1099 and they didn't save enough, so their taxes were due and they weren't able to pay them. So they complained. Because that was the way of they were expecting that the employer would then have to pay the taxes for them. That wasn't the case. The employer had to pay a penalty, and it was not this employer, it was one I worked for previously, but the individual was still liable for their own taxes at the time on the California state level.
Now, did that person then leave your employ, whatever it was? You had ended that relationship? Okay.
Correct.
All right.
Yeah.
Here's a question. If we pay a musician a lump sum for playing a solo, is that person a contractor? Now, if we pay a musician, I don't know that this musician is coming from the section and is coming out to do a solo, or if this is a musician coming in from someplace else. But
yeah,
is that
if you bring
person
someone in to play a solo and you pay them a flat fee, that's typically not an employee.
Okay, so that person would be a contractor.
Right.
Okay. Here's another question. What about a youth orchestra librarian who orders music on his own time and also copies music parts? Youth orchestra librarian.
Our youth orchestra librarian is a contractor, but I don't think they come in here only for certain things. Usually I think they do like that. They are copying music and doing things typically on their own time and in their own place. We don't have a space for them to work unless they're dealing directly, if the orchestra's here and they're passing out copies and doing things, because a lot of that does not happen here. So that's kind of handled outside of us, and it's really a separate entity. So we have agreements with the youth orchestra, but we don't, they're not employed by us, and none of the people there are employed by us. So I'm not really sure. If they're a part-time librarian, which typically a youth orchestra librarian might be, they probably don't have a regular relationship with somebody monitoring everything they do and telling them how to do it. They're just doing their job for the orchestra. So,
would you then want to make a contract with them, or?
I would have a contract with them.
Okay. All right. Here's another question regarding workers' comp. Should you pay workers' comp on some independent contractors? And then further saying, like the MTT example, do you pay workers' comp on him?
We do not pay workers' comp for our contractors. They are responsible for having the appropriate insurance. If we have independent contractors who don't, then they are covered under our workers' comp by default, because they have to be covered in California. We typically, for someone who has a contract entity like MTT, we would ask for their to have on file their insurance documentation. And he has it because he's all over the place and does all kinds of things, and that's all. A lot of his travel and all is considered work. So somebody with an entity that they contract with, or they set up a contract entity just for tax purposes, typically will get insurance or will ask them to. Contractors that are doing work on it for the stagehands and all sometimes will have stuff through the union, or they will be covered elsewhere. But for our independent contractors who are on site, they're required to be covered by workers' comp. If they don't have it, we have to cover them. Yeah.
So the conversation has to take place when you are looking at employing somebody. You have to talk about, you have to ask them if they have a certificate of insurance, et cetera.
Right.
I mean,
right.
I've never
and
done
if they
that,
don't,
so
you should ask them
to
get one. If they can't and you want to contract with them, then you have to make sure they're covered under your policy.
Okay. Interesting. Never done it that way. Okay.
Yeah, California requires everybody be covered.
Right, yes, yes. Here's a question. Can our own administrative employee be an independent contractor if he or she performs in our music festival or camp? I don't know this organization, so.
Typically not. If they're an administrative person and once they're an employee, it's hard to have them be an employee and a contractor. We had some who they said were part-time employees and part-time contractors, and I got rid of their 1099 stuff and moved them all onto payroll, because once they're an employee, it would be very hard to justify not withholding taxes on the other part of their pay, because really the state doesn't see them as being both. If they're an employee, they're an employee. Whatever other function they do for the organization, they're still an employee.
Okay, okay. I think it sounds like this person is on staff in one capacity, but then they're asking
right.
him or her to then go run the music festival or camp.
Right.
And it sounds like that status then wouldn't change.
Yeah,
okay.
Because they're still under the direction of the organization. They're still, and they're just doing a different function. But once you're an employee, whatever the organization asks you to do, you would then be doing as an employee.
Okay. This one's a little long. If an employee relationship completely fails in one or more criteria, but meets other criteria, I don't know what, is the decision based on a preponderance of evidence rather than meeting the complete criteria? And then this person's orchestra was recently determined by the NLRB to require to treat its musicians as employees, though they clearly get employment by playing with several other orchestras. And the NLRB is the National Labor Relations Board.
And the NLRB tends to be very conservative as to how they're going to view this, and they will, and I would say depending on the criteria, they don't have to meet all the criteria. If they, the criteria looked at by both the state and the federal government are going to be any of those that make somebody look like an employee, make them an employee. They're really looking at those issues. They look at all the issues and say if some of these are met, they're more likely going to be an employee. They don't try to weigh them. They try to look at the control and everything else. So I would say, yeah, they might be an employee of more than one entity.
Yeah, this is in California a lot. We refer to them as their Freeway Philharmonic, and these people play in several organizations. It has, impact for filing unemployment and that sort of thing.
Right, and for the way that taxes are withheld and the way that employment taxes are paid. Now that being said, it's not that you have to give everybody benefits, because you still would have to have what you consider part-time, and you can average during the year their hours and everything else. So they might not get that, but as far as the tax treatment and payroll taxes and all, and that's where the government, you have to assume that they're looking at anything they can do to increase their revenue by collecting employment taxes at both the state and the federal level. And so they're going to use any of those criteria to determine whether someone's an employee.
Yes, good old California.
Yeah.
Here's another question. Our librarian is an employee. We pay them X amount of dollars for the job. They're considered part-time but are not required to turn in a time card. Their lump sum wage is prorated and paid monthly. Is it okay not to collect a time card? Is the term part-time employee correct? Can you call their payment a stipend? Well,
You can call it anything. Again, it goes back to the control. They're required probably to be on site. They're required to do certain functions at certain times, and they're there when probably when the orchestra is playing. They're there before. They're there after. It depends on the extent of their work. They're probably doing the bowing, and they're doing different things with music. They may be arranging for rentals and things like that. So typically, I would say most of what the librarian is doing is probably employee work, even if they're part-time. They may, like I said again, they may not get benefits because they may be doing part-time work that's below the threshold of what you consider full-time or benefit eligible, but they may still be considered employees as far as tax withholding. And I try to envision the stuff that the auditor came out and how they pushed us as to what kind of control, and they tend to be very much leaning towards, you have to prove that someone isn't an employee, so you have to try to show that you aren't controlling what they're doing. With a music librarian, they have a lot of requirements. They have to do things a certain way. You're not just looking at a result. You're not giving them, say, here, we want this result to be this. They really have certain procedures and all that they have to follow that are the organization's procedures and not their own.
Just to go back to this time card business, I attended a workshop several years ago and was totally scared to death about hearing about these time cards, and so we started a process here. Even if somebody is, their salary is annualized, I still, because of the implications of overtime, I ask everyone, well, I don't have that many people here, as you know, but we all do time cards. Do you have something to say about that?
Well, I don't always, there's issues around time cards, especially if someone is an exempt employee, and our librarians have been exempt. Once you start looking at their hours and all, there's the chance that you could make them non-exempt and then subject them to overtime. Once you start collecting the hours, it's hard, because if you're doing it for a reason, if you're doing it for the way you charge projects or the way you allocate costs or whatever, but you're not basing their pay on the hours, that's one thing. Like with these librarians, for example, if you're not basing their pay by the hours, You don't have them do a time card, but you're giving them a flat fee, and they're working a certain number of hours, you assume, in order to get that fee. And that may vary. So unless you're really in danger of paying overtime a lot, if they're working very long days and they complain about that, you could always, if they're an exempt employee, it doesn't matter.
Right, I know.
By collecting time cards and looking at the hours, you're actually saying that they're not exempt. You're looking at their hours unless you're using it for other purposes.
Well, it's a way to track if this was a sick day, if they were out sick, or if a vacation.
Right, and you could do that for whole days without jeopardizing that status.
Okay. All right.
And it's when you start doing it hourly. It's like when people say, well, we have an exempt employee and we want them to do a time card because we're going to reduce their pay by 2 hours if they work a 6-hour day. And that puts you in danger of making them non-exempt because you're considering them hourly. See, it all depends on what you use it for.
Okay. Okay.
So tracking time is not the problem. It's how you use that time and if you tie it to their pay. Whole days are fine, and even half days are fine. You know, and you wouldn't jeopardize anything. But once you start going to hours, then you start having issues. But with this kind of job, you're talking about someone who may work various hours depending on when the performances are happening and when the music is coming in or whatever. So, you know, depending on what kind of work is involved with a certain score or certain parts or things that come in, they may work more or less, and so you're kind of evening out their pay over a period of time because sometimes it would be little. That could still be, you know, I would say they're an employee in most cases because of the specificity of the job and the fact that it relates directly to the primary function of the organization.
Okay. Thank you. Here's one. Are educational orchestras looked at the same as professional or community orchestras, i.e. youth orchestras? So I guess the question is, are youth orchestras looked at the same as an orchestra that's getting paid?
I would think if there's no pay, then you don't have any withholding issues. And we have employees that work with the youth orchestras, and those are mostly administrative staff. So
right.
Those are employees, but the youth orchestra participants are not. They're not paid. So there's no issue about withholding pay or anything, or withholding taxes.
Okay,
there are no
so
payroll taxes.
So the person that's asking the question, it runs a program at an elementary school, an elementary string program. So I think that this isn't an issue with them.
We have contractors who go out to the elementary schools and do work with students, and those are contractors. So we have a number of educators who go out to the schools and work with students. So, and some of them work with the youth orchestra, some do not. They just work with the schools, and so those are contractors. Their work is outside the organization. They do it their own way. They have, you know, and they probably work for others than just us because it really is part-time. We actually just pay them on a quarterly basis because we don't know. You know, they're out there doing it, and they come back to us and file reports on what they've done and all, and they submit a invoice and quarterly, and we pay them. So those are contractors, but it all depends on, again, the relationship. We don't, those people are not here. We don't manage them, or, you know, they devise their curriculum. They just know that, you know, our goal is to provide certain results to the schools, and how they do that and how they get theirs up to them.
Okay. Thank you very much. I don't see any other questions here. If somebody does have another question, if they could quickly type it in and get it to me, we'll go through it. Otherwise, we have recorded this webinar, and it will be available for a limited amount of time. Caroline will be sending you the link to it. And then I just wanted to say that we're so happy that you all joined the call. This is a tough topic, one that comes up over and over and over again for us here at AXO. But we thank you all very much for joining us and hope it's been useful. Ken, we can't thank you enough. We're so grateful to you for giving up a couple of hours of your time to to do this. We hope it was a happy respite from your tough work.
It was a nice little break, and Chris, I always enjoy working with you, so thank you.
Thank you so much. All right, goodbye, everybody.
Bye.
Bye-bye, Ken.